All right. So Joey, welcome to Polyfactual. Um, Super excited to talk to you today because I think we had a conversation. So we had a conversation a couple weeks ago, I think, where you and
Yeah,
I just got on a call, and I think we hooked up on the call because Polyfactual, we're building like a DeFi trading protocol. So, that's what we're doing. And I would, as a trader, I'm super interested in perpetuals, right? I've traded
mhm.
perpetuals. I mean, that's my go-to thing to trade in crypto. And obviously, I found out that you were building perpetuals, and I was like, I gotta know this guy. I gotta pick his brain to see what he's doing and how he's
Yeah,
building perpetuals. Because if this product were released right now, I would immediately use it. I would immediately jump into it and start using it. And I would use it for all my prediction market tradings because I only like to trade on leverage.
yeah,
So I'll just kick it off with that, and I'll just say it's awesome to have you on. Um, and yeah, if you want to kind of introduce yourself, talk a little bit about your background, and we can kind of kickstart with that.
definitely. Well, first, thank you for having me on. I will say that what you just described as a trader, sort of pining for perps like leverage in prediction markets, there are many, many such cases. I myself am not a trader, but in building this protocol, I talk extensively with traders who specifically focus on prediction markets and are also coming from more of a perps trading background or even a trenches background and are interested in prediction markets, but the same upside potential doesn't exist yet, and that's exactly what we're building. So yeah, in terms of my background, before we get into that, my actual background is hardware, so mechanical engineering, industrial design. I started and worked at a few IoT, Internet of Things companies, like the first decade of my career, which that was super hot at that point. It's kind of like been embedded into consumer products now. It's not really its own category anymore. But when I was doing it, it was pretty new. So I always, built software as like a supporting role for hardware products like telemetry, on screen, on device interfaces, apps that paired with the hardware stuff. But software never really felt as an engineer or designer substantial enough for me to just build pure software products. And then the last hardware company I did was actually a coffee company designing rapid cold brew systems that used acoustics rather than heat to rapidly extract coffee without heating it up, which has some nice flavor profile benefits. Never actually productized that, but license the IP that we developed to a couple of live products now that are using this. But the reason I bring that up is because through that last hardware company I did, I learned about NFTs, and this was like 2021 or so, and there was a lot of hype around. It sounds weird now, but like NFT RWA applications, and this specific was using or starting to use this NFT system developed by this company that I don't think exists anymore to basically create NFTs of coffee from specific regions and specific growers and producers to basically track the provenance and expose these small producers in like Ethiopia and Honduras and places that grow premium coffee to a much wider set of buyers in the world coffee market, and expose them to better price discovery and thus kind of cut out a lot of the supply chain stuff. Never really went anywhere, but through that I learned all about blockchain and eventually found my way into DeFi, and I found myself on the Wonderland page circa like 2021, right as DeFi summer was heating up. And I remember seeing the page and I was like, this is a pretty specific kind of weird, very basementy aesthetic, which, I always found interesting and kind of appealing. But there's also like hundreds of millions of dollars in this thing. Like what is happening here? What's going on? And then my sort of obsessive engineer optimizer brain just like kicked into gear. And I sort of, over the next year, just like immersed myself in Solidity, smart contracts. the kind of logic of them being these sort of passive things that are acted on by either users, keepers, bots, any sort of like the dark forest is what it used to be called, and I think is still referred to sometimes, in this adversarial environment. And it was so physical and so mechanical compared to any other software stuff I'd ever encountered before that as an ME, it just really, really appealed to me. Like, and I say appeal, but I became totally obsessed, and that obsession has never gone away. So, yeah, since that point, this has been my whole, I never went back to doing hardware stuff. This has been my whole focus. And my focus really kind of narrowed down onto creating lending systems for types of collateral that are difficult to lend against using traditional systems, but for which there's a lot of demand to use as collateral. And that's what brings me to the current product that I'm building, which allows borrowing USDC and thus leveraging Polymarket and eventually other prediction market position tokens. So that's, yeah, that's kind of my background and what I'm building right now.
Yeah, it's so funny that you mentioned. I was talking to Trey from Polysites the other day, and we were talking about how there's all these bridges into there was all these bridges into crypto, right? There was like SafeMoon was
Mhm.
a bridge, right? Meme coins were a bridge, and then there are and NFTs
Mm.
were a bridge, and it's all very interesting. And I think the interesting aspect of it, and this is why I think prediction markets are kind of interesting, is because it comes from it's tech with a heavy emphasis on social
Mhm.
mindshare. And like this is like it's as an engineer it's exciting because I mean there's a lot of B2B products in crypto, but even those have some sort of attention driven mind share attached to them, and I feel like prediction markets are similar. What kind of attracts you, kind of piggybacking on that? I'm interested to hear your opinions on that, but what kind of initially attracted you to prediction markets? Why do you think that this is kind of like the place to be right
Yeah,
now?
well, what you just said is a huge part of it. Where prediction markets, I see poly market charts, and this started around leading up to the 2024 election, but I see screenshots from poly market shared by friends of mine who have zero other interaction with anything in this world. Like they don't even look at Bitcoin charts. They never paid attention to NFTs. And I see this all over the place. Like I see friends of my parents on Facebook sharing screenshots from Polymarket about like the New York mayor election right now and stuff like that. That level of distribution, that level of penetration does not exist for any other product in crypto, especially in DeFi. Like it's just not possible. Like compare that to the meme coin trenches that really became a thing last cycle with Pump Fun. And Pump Fun did, over a yard of revenue. I mean, that was huge for crypto, huge PMF. But you never saw anything about any meme coin really shared outside of crypto and crypto adjacent spaces. Nobody could be bothered to care about any of this really weird stuff that seemed completely incomprehensible to them, even if there was a lot of money to be made. Maybe you talked to your friend who made a ton of money on peanut or something, and so you bought a little peanut and then got wrecked, and you never look at it again. That has no relevance to anyone who just is looking for interesting stuff on scrolling their feed on Facebook or Instagram or any of these other normie platforms. Prediction markets are fundamentally about issues that matter and that have impact on the world outside of crypto. Sure, there are some crypto specific prediction markets, but if you look on Polymarket right now, that's very little of the top markets by volume. Most of the top markets by volume are about real world events that would be widely interesting or at least comprehensible to anybody, not specifically to people in this space. So that inbuilt distribution and the fact that, last cycle proved how distribution is this critical piece to how much something grows. I mean, you mentioned the social aspect, the attention aspect. That's distribution at the end of the day. Prediction markets have that inbuilt distribution, and I think that's just immensely powerful. So that's a big reason why I'm just kind of bullish on prediction markets to the degree that I'm building there, it's being validated more and more. I mean, earlier today, Polymarket announced raising 2 billion from the company that owns the New York Stock Exchange at a 9 bill valuation. So clearly, this is becoming a more consensus point of view. But yeah, I think that the distribution is off the charts. Sorry to mix metaphors. Is off the charts compared to anything I've ever seen in crypto, even like the Bitcoin chart. But the missing piece is it's not as tradable by any stretch of the imagination as many of the other things that have PMF in crypto, largely perps, and to use an earlier example for sort of more retail friendly, meme coins during their height on Solana this last cycle.
So that's interesting what you just said too, because um, do you think so? Perps are not a blockchain
Right.
invention, right? First of all, I find this fascinating about perps because they were brought to the world via the blockchain, right? Kind of like I feel like prediction markets are being brought to the world via the blockchain. Like that, there's a lot of different innovative tech that never
Mm-hmm.
caught hold in
Mm-hmm.
Web 2 that is catching fire in blockchain, which is very interesting. And I think that crypto and blockchain has the unique ability to do that. Even Kalshi right now is going into they're moving into blockchain. Um, so I think what you mentioned is interesting about perps, because do you think perps will actually be when we get perps on prediction markets, right? When we can trade with leverage, and it sounds like what you're building basically sounds like
Yeah.
perps with prediction markets. Do you think it's going to be bigger than perps on crypto and equities? Like, do you what is your estimate of the future of perps integrated into prediction markets?
Yeah, that's a really good question. So I think that it will be far more retail friendly in that if you look at the sports betting market right now, it's a multi-billion-dollar market, but they have to fiercely compete, and I would say, hey, their CAC is, obscene. um, and they are extremely extractive. Um, I think that there's an opportunity with leverage. I mean, the reason people like sports betting are the parlays, and if you analyze the structure of a parlay from a remotely quantitative perspective, and I use that term kind of loosely there, but if you just like do the math on a parlay, it's a really bad deal for the better, and it's an awesome deal for the house basically. And yet they're extremely popular. I think because the sports betting apps have gotten very good at optimizing the dopamine loop and optimizing the variable reinforcement and these sort of psychological things that can be quite addictive. But I think that leverage, so not even getting into perps yet, but leverage on prediction markets will, I think, enable them to take a giant bite out of that market specifically. I think there is a nice halo effect on prediction markets as well. Who knows how long this will last, if it will increase or decrease. And my guess is it'll kind of decay. But there's a halo effect of, people think of prediction markets as associated with like Nate Silver and doing kind of wonky stuff about, there's this intellectual vibe to it that doesn't feel as degenerate as a lot of the other stuff, including sports betting. So there's less of a stigma around it, even though it is absolutely gambling if you want it to be. Um, then, to directly answer your question, though, I think what defines a successful perps exchange, whether it's a DEX or a centralized exchange, doesn't really matter, is liquidity. And is at the end of the day, it's the execution that you can achieve on it. So the missing piece for prediction markets there is sort of there's different terms you can use for it, but the buy pressure, or the buyer who's buying the yes or no tokens from markets for a reason other than trying to bet that that's the token that'll win. So you can call it soft flow, you can call it price agnostic flow, whatever, but there's no one who's really using prediction markets the way perps are being used in a lot of cases as market maker strategies to hedge other positions somewhere else. And that flow that's not trying to just win in that specific market for perps is really critical to the health of those markets and to that liquidity, and ultimately to the execution quality you can get on the different perps dexes. That doesn't exist in prediction markets right now. And you can see Polymarket definitely recognizes this. I think they're offering like 4% yield just for sitting in a position out of their pocket. I mean, it's totally unsustainable. Like, it's an expense for them, but I understand why they're doing it, because there's no way other than that right now to incentivize liquidity to come into a market if that liquidity is not there to try to, pick the winning side of the market. So all flow basically on the prediction markets right now is, I think it's a stretch to call it toxic flow, but it's there to try to win. What our protocol does is, because you can earn yield for lending the yes or no tokens from any of the markets, you get a new kind of buyer and a new kind of buy pressure on Polymarket to start with, where people will be buying tokens if the yield is good enough, not caring if that token is the one that's going to win, and not really caring as much about the price they're buying it at, just because they can earn yield for supplying that token to people who want to leverage up or down, go leverage long or short on it. So that's, kind of, again, a longish answer. But I think that the first thing that will happen, I think that with leverage and with perps like functionality, prediction markets can really start to compete with totally off-chain sports betting. Um, I think that they open up, like you said, perps weren't really a thing until they went on chain, even though the concept existed. I mean, perpetual options are a thing before that, but it took the blockchain to really enable that. I think that what prediction markets with leverage will enable is betting not just on sports, but on, I guess, what people are calling mention markets, or like betting on other types of non-deterministic outcomes. Like, will somebody in some live event say some word, how many times will they say it, things like that, that, without leverage, what you get, I mean, there's clearly a lot of demand for these much shorter term markets. And in the extreme, you have something like Euphoria and the many Euphoria clones that copy that UI, where you're basically tapping squares on a price chart, and you are entering basically into a very short term prediction market. Will the price cross this square, or will it not? Um, which is an interesting way to sort of put a UI around very short-term prediction markets. You can talk about that as an option as well. But what the leverage enables is meaningful trades along very short time frames, no matter how long the market itself is. So even if it's like 2026 election, um, or I guess that would be like the primary and then the midterms. Um, Even if that's a very long-term market, if you enter into that now with leverage, if like you buy yes at 40 cents for some candidate and it moves to 43, with enough leverage, that can be a very meaningful trade. And that's a much shorter term position than just entering that market and waiting until it resolves over a year from now. And that kind of changes the entire nature of the game.
Yeah, yeah, it's interesting that you're talking about this, because also, like, it's like what you said. Like, when I first got into prediction markets, my biggest issue was not finding a short enough term market, right? Because I hated waiting. Now you can play those longer term markets narratively, right? Like, if some news comes out about the Middle East, if you're playing like some market with Israel or Iran, you can play those markets narratively when headlines come out. But that's about it, and that's very hard. I mean, like, a lot of times you're playing the waiting game. With mention markets, they're the only markets that are like, when you go onto them, they seem highly liquid. That's the first thing, and there's massive price action.
Right.
So you get like crazy upside with some of these mentioned markets. And I think you're absolutely right. Like, what leverage would do is, what you're saying is, it could bring that to every market essentially.
Exactly. It brings that to every
Um,
market. And it also, even for something like a mentioned market where there's a ton of price volatility, still the best you can do is buy a dollar at a discount, right? That's just the boundaries of what the range of the price space is for a prediction market. So at best, if you buy something at 10 cents and it ends up being the thing that resolves at $1, you've 10x'd, which is great. I mean, that's an amazing trade on a prediction market. But for someone coming from, Hyperliquid or Pump Fun, that's not so exciting. I mean, a 10x is great, but you have the opportunity for 100x, you have the opportunity for, just crazy upside. And that's what really attracts like new users to come in. Like you hear about somebody who hits some crazy 100x or above. Right now that is not possible on any prediction market, regardless of, how well you trade it. Leverage can take that 10x and, very simply with 10x leverage, it's suddenly 100x, obviously. Or what's more interesting, I think, is if you hit a 2x, which is much more common and, doable on most prediction markets. You buy something at 30 cents, or no, you buy something at 50 cents, it resolves to, a dollar or whatever, more typical. Then with leverage, that becomes something above 10x, which, that becomes more reproducible, and you're suddenly in a very different realm in terms of the type of trader who's going to be attracted to this. And a lot of those traders are already here looking for a rotation, especially from meme coins, but I'd say from the perp dexes as well.
So what is so I don't know much about this space, right? The perp space. I know that people have been talking about it. When I've asked people on Twitter, they're like there's pretty smart people working on it, but I have no idea like what makes why can't you just this is my simple kind of like novice question. Why can't you just take the perps stuff that's going on in crypto and move it on to prediction markets? Like, what is, and I guess, like, in addition to that, right now, who else is building in this space?
Yeah.
What are some of the issues that you commonly see when implementing this?
Yeah, that's a great question. So the main reason is that from a collateral perspective, the outcome tokens or the CTF tokens for Polymarket, I'll just use Polymarket as the example for all of this. Types in crypto, and a lot of the ones that are listed on perps exchanges. So number one, they always resolve, like one yes and one no is always worth one USDC, regardless of where in the market's life cycle the you are at that point, if it's close to the beginning, close to the end, in the middle, whatever, regardless of what the individual spot prices are of yes and no at that moment in time. One yes and one no on Polymarket in their contracts, there's a permissionless function where you can redeem one yes and one no for one USDC, and you always get that one USDC. So that's very different from any other collateral type other than, I guess, stable coins, but you're not going to, leverage up on stable coins unless there's some yield strategy you're doing. Um, the other part of it is they have a very clearly defined duration where, at a certain date in time that's set immutably, obviously with the dispute functionality, but in general, when a market starts on Polymarket, the resolution time is set and everybody knows that. You can see that clearly. So at that point, one token will be worth, and I'm just using a simple binary market as an example. This same logic applies to multi-binary markets like, you know, um, what's it called? Primary candidacies, stuff like that. But just thinking about a yes and a no, at the end of that market, the yes and the no, one will be worth zero, one will be worth $1. So those are the factors that make prediction market tokens very different from other types of assets that, not just perps, but also lending infrastructure like Ava, Morphone, things that are sort of in that category, are all built for, where there are these collaterals that have no upper bound. Yes, the lower bound is zero, but it's for, established collateral things like Bitcoin and ETH. For them to go to zero implies some worldwide catastrophe at this stage. So that's not really in the realm of consideration. And a lot of kind of risk margin and buffering built around the volatility. So, the basics of margin lending in DeFi are that you accept a certain collateral type that has sufficient liquidity and just kind of sufficient lendiness to a degree. So mainly, if you look at Aave, there's like 20 whitelisted collaterals, basically the blue chips. Then they set in sort of a centralized way or using governance some minimum collateralization ratio, which is basically an LTV limit, like how much USDC can you borrow against $1 of ETH. And it's usually something like 50 to 80 cents, depending on the volatility. You need that extra buffer to absorb basically the volatility of the underlying collateral so that if the collateral is going down, there's enough room for a liquidator to come in and be incentivized to pay back the debt, capture the collateral at some kind of discount, depending on how risky the collateral is. That discount is set, and then the position's liquidated and the system avoids bad debt. So if you try to do that, and there are teams trying to do that, to apply that exact model to prediction market tokens, to polymarket tokens, you'd have to set a very, very, very high LTV. And I know people are trying to do things like the further you are from market resolution, the more um, efficient the LTV can be because there's just, more time to resolution and the liquidator might be more interested in coming in and getting the token. The closer you get to expiry, the more stringent the collateralization requirements become. But really, and like when I decided I want to start building something that lends against prediction market tokens, I went down that road. Initially, it lasted like I think less than a day, and I realized you can't really build Aave for prediction market tokens. It's just the asset type does not work with this model. There's not enough capital efficiency and safety for the lenders and the system to make it worthwhile. So that's what led to this fundamental rethinking of like, what do we build specific to the nature of these tokens, which are that they, yes and no, are always worth $1. They resolve at a certain point, and it allows these really cool features in our market, like no liquidations. There is no liquidator. There's no collateralization ratio. Rates are fixed, which is really cool. Normally, in any sort of DeFi lending, rates are variable across the life of a loan, depending on usage of the asset being borrowed. USDC, for example. Um, and yeah, it just kind of allows our loans to really act like in traditional finance what would be a zero coupon bond, which is it's just a bond that you borrow at a discount. There's no interest being paid. The interest is sort of embedded up front in that discount. You know how long the loan is going to exist, and the rate is fixed. And so at the end, it's just worth the full amount. And that's really what we're able to implement. So there's really no other way to do that with normal crypto collateral, or really traditional collateral that's brought on chain, even because normally there's no expiration to a type of collateral, and it has this unbounded up and down. I guess down again is bounded by zero, but that's not realistically going to be hit in any normal scenario. So yeah, all of that's to say, prediction markets require a fundamental rethinking of this. So yeah, that's again a super long way of answering your question, which is a great one. Like, why not just build like Hyperliquid, or do some kind of use Hyperliquid for prediction market tokens? And the reason is really that it's fundamentally different. So yeah, a lot of the issues and roadblocks people run into in trying to build that for prediction market tokens, exactly what I described: the volatility of the tokens themselves, like going from 10 cents to $1 and kind of bouncing up and down across their potential price bounds of 0 and 1 rapidly based on little pieces of information. And then the fact that the market resolves at a certain point and half the collateral you lend against is going to be worthless. So, how do you deal with that from a lending perspective? How do you possibly incentivize liquidation of a position that you lent against that now the collateral is worth zero because they borrowed against the wrong side that lost? How do you deal with that? I'm not going to get super duper into that on this because that's like our secret sauce. But suffice it to say, that's why it requires a mechanical base layer rethinking of what is the collateral value, how are you determining the value of the collateral, how are you ensuring that lenders are not at risk of principal loss when lending against these prediction market tokens.
Yeah, and I think you brought up a good point. Like, you can't really build Aave for prediction. Like you can't implement that because in my mind, it's a lot like those subprime mortgage loans, like it's or just like super risky assets to be doing
Yeah.
that with. So like you see that there's a lot of incentive on the side of the person who's taking out the leverage, of course, but there's not a lot of incentive for the lender. So it's like, will you acquire users? And if you do acquire users, you'd only acquire users if the market were highly speculative, and you
Mm,
need the same conditions that we see in other kind of like those more risky financial assets that were being traded.
right.
You know, and so with kind of like your implementation, without getting into too many details,
Yeah.
um, and you can totally brush aside this question if you want.
Yeah.
But what type of financial asset that exists right now would it most be like? Um,
That's a great question. There is not really one. I mean, I guess the closest would be in terms of the collateral, there's really not a good comparison because the thing about prediction market positions, I guess you could compare it depending on what price you buy it at, how close to a dollar versus $0, a very out of the money or in the money option, but not really because options don't have this, bounded upper point at which they could expire. You could model it as like the strike being zero, I guess. But again, I think that a bad habit, and I'm guilty of this as well a lot of the time, but I've tried to get better about it. Options are always like the comparison that people reach for when trying to describe fundamentally new things in DeFi or on chain because you can kind of squint your eyes and describe anything as an option and be like half right, but at that point it's not super useful as a comparison. If everything's an option, nothing's an option. So I don't want to just say like, oh yeah, it's like this very specific type of option. It's not really a valuable comparison. I think that yeah, it's its own thing because again, you have something that at any point in the life cycle of the market, the yes and the no, regardless of what their individual prices are at that point, sum to a dollar. And that never changes. There's no volatility ever in the binary what they're worth together. One can be worth a dollar, that implies the other is worth zero. One can be worth 60 cents, that implies the other is worth 40, sorry. One can be worth 70, that means the other is worth 30. So they always sum to a dollar. There's nothing really like that that you can compare it to, but that is the foundation of how you lend against this stuff. The loan itself, the structure of the loan, it's an easier comparison. I said a zero coupon fixed rate bond with a very specific lifetime. That's just kind of a standard, easy to reason about thing.
yeah, I think options are definitely like the comparison I hear the most, just because of that binary outcome. A lot of times, it's like so people related to that. And people use prediction markets in a strikingly similar way. A lot of times, like like a lot the classical use for options is, I mean, like you could use it for crypto, for getting more exposure to crypto. I mean, one of the markets that I love the most on Polymarket is the crypto markets, because I find that you can make so much more making a bet on whether Bitcoin will go up than you can on perps. Like, like what I was doing, sometimes you can make like a crazy amount if you get, because there's a lot of asymmetric upside in those markets, or there's more
Yeah.
than other than like, other markets.
Hmm.
So I think options is an interesting comparison, but I think you're right. Like it's an overused comparison. Um, I'm wondering too, like, so in terms of your product, right? In terms of what you're kind of like high level, what you're working on, it sounds like you're kind of implementing lending as almost like a kind of high level solution. Um, what is what is kind of like the next steps? What is when are you thinking about launching? What does the roadmap for the product look like? I think we lost your camera, Joey.
Sorry, hold on. Am I here?
Yes.
Okay, sorry about that. Yeah. Okay. So let me answer the first question. So yeah, lending is the primitive, right? On a very base layer level, what's happening on our smart contracts is you're presenting collateral as a trader to the protocol, which is then lending USDC against your collateral based on our super secret process. Then you could ostensibly take that USDC and go do something else with it and still have your position. That's not really going to make sense unless you can find a use for that USDC that earns a higher return than the cost you're paying to borrow it. What's going to be more profitable in most cases is creating a loop with that USDC, which is simply take the USDC, buy more of the token that you're borrowing against, whether yes or no in that market, add that to your collateral, borrow more USDC, take that USDC, buy more of the token, add it to your collateral. This is a very standard pattern in DeFi as a way to build leverage using lending. Um, this will happen with the integrations we're doing. This will happen automatically behind the scenes. You'll just see a leverage slider, and this position will be built automatically for you based on the collateral you present and the amount of leverage that you want. But yeah, so that's really the form that it's going to take. We're working with, as I said, um, well, we have one terminal partner that we're pretty far along with, and we want to provide leverage to the emerging terminals that will be used to trade. I think a higher and higher amount of the poly market flow will come through these terminals. I know polyfactual, this is what our first discussion was sort of in the context of, which I'm super excited about as well. But that is going to be the way that we enter the market. So we're not going to have our own front end. No one's really going to know we are a product in and of ourselves, but we're going to be providing this leverage functionality to the emerging, let's just call it polymarket interface projects. And that's going to be the way that you encounter this. And that's going to start. I mean, we're going on to Polygon mainnet very soon. We're just going through our final audit right now. The contract itself is very compact and efficient. It's like under 1,000 lines of code total, which is not easy, but I'm very proud of it from an engineering standpoint. So that's being audited right now. We go onto Polygon mainnet. We don't launch with our own front end. Like I said, it's more about these integrations. And then on the supply side, for actually supplying the liquidity, the USDC that will be lent, that's a whole other thing, which is mainly again a biz dev process where I'm interacting with both liquid funds, certain whales, and certain protocols that just want to maximize their USDC yield strategies without taking on directional risk, which would greatly change the nature of their strategies and require much higher yield, and is probably outside the mandate of what they're building in the first place. So for the many amounts of USDC that's looking for risk off yield, and risk off is relative, right? You're already on chain, so there's a level of risk there, but risk off in terms of no exposure to market outcomes or price action. That's how we're going to, and how we're right now in the process of sourcing what we're calling LP. But it's not LP in the sense of like LP on a DEX. It's just liquidity provider. You're literally lending the USDC to the people seeking the leverage. So those are kind of the two sides that we're putting together. None of it's going to be on our own front end to start with. We're not going to launch as a branded protocol. We're just going to be providing this functionality to start with. And that'll be a good way to, yeah, just build our TVL, start building revenue, and when it is time to launch our front end, if that is the strategy that makes the most sense, we'll do it then. But I see some excellent teams, you guys included, building front end terminals for prediction markets, and I think that that's the best way to integrate to start with.
Yeah, that's a genius move. That's a really good move, because I think the integrative approach, and it's kind of what we're trying to do with polyfactual too. Like we find that the integrative approach, like this early in the market, I feel like this is like a good way to go about things. Like, and your guys' strategy seems a lot like, oh man, uh, I think it's called Orderly Network.
Oh
So
yeah, they
yeah.
provide the perp dexes for anyone who wants to white label. Yeah, I know that on Berachain ecosystem, Kodiak, which is the main dex on Berachain, just released Burps, which is perps with a B because it's parachain, but that was, yeah, or an orderly thing. Yeah, there are a bunch that have kind of launched perp dexes, like they almost feel like meme coins, and like they're kind of, it's like a joke, but yet they have a fully functional perp dex, and lo and behold, it's orderly in the bag of it. So yeah, I agree. I follow that project very closely. I have a bit of an order bag myself, and it's, yeah, it's definitely, you nailed it. It's definitely like a somewhat of a blueprint for how we're doing this.
Yeah, and for us, I mean, definitely, when we release our product, so we're working on Facts.trade. And when we release our product, that's one of the first things we're going to be doing. Because I remember when I was building Raise.win, and it was incredibly hard to find. So Raise.win, for context, was like a tokenized copy trading platform that we worked on, and you could like basically tokenize traders. The traders would use our app to trade. We plugged into Uniswap, and then we were looking for a perp dex to plug into. It was incredibly difficult to find a perp dex on Base. We eventually,
Mm,
so Orderly was one that we were looking at. We were also looking at another one, which used to be like a synthetics. We were looking at synthetics, and we eventually settled on JoJo because it had like a contract to contract interface, which we really liked. But a lot of perp dexes have to eventually graduate, or perp liquidity hubs, I guess you could call them, eventually graduate. But from that to like a kind of webhooks type thing.
mm.
But yeah, I think for us, like a product like yours would be super helpful. Would be super helpful to get like some sort of liquidity leverage providing infrastructure that we could just plug into and allow our traders to get in on. So I'm super excited for this product. I'm not gonna lie. Um,
Yeah, that you said exactly what it is that we're building. Where for any partner who wants to integrate leverage capability, like you said, into their whatever it is, whether it's a mobile app, a professional terminal, anything that's optimizing the prediction market trading experience for a certain segment of traders, literally we allow you to just throw in a leverage capability, whether it's a slider, whether it's different, buttons that you press for preset amounts of leverage, anything. And then behind the scenes, we're basically spinning up those loop leverage positions for the user based on the tokens that they have and they're using as collateral. And yeah, from the user's perspective, it does feel, it's a very perps like experience. Like if somebody's coming from Hyperliquid or a centralized exchange, they're going to feel right at home. It's just that they're doing this with prediction market tokens versus, ETH or Bitcoin.
so how can people? So there's two sides of this. There's liquidity providers, and then there's people like me.
Yes.
How can people like me get in touch with you if we want access to this early when you guys launch? And how can again, it's a two-part question, but how can the liquidity providers also get started with that process?
Yeah, so for both at this stage, I would say, you have my X account loaded right there. So just go to at Joey Roth on X. So just shoot me a DM. I'm quite responsive to anything about, what we're building right now. So if you're interested in being either an LP or you're building a product over Polymarket, because we are supporting Polymarket first, and you want to have leverage functionality, definitely shoot me a DM. Um, for sourcing the best way as an individual to provide liquidity, if you just want to earn really good USDC yield on this, we will release our partner, sort of the yield protocols that we're going to be working with. So things, like Yearn or Summerfi, where they just have these USDC strategies, or even Morpho has these curated USDC strategy vaults. We might not even have our own strategy vault. It would just be part of something that, Gauntlet, for example, is putting together. Our USDC yield would just be bundled in with other venues for USDC yield as part of a larger vault strategy. So you might not see a specific USDC vault where that USDC is just being put to work in our protocol. It's going to be more like we're going to become a component of how these vault strategies that may already exist, they may be putting together prediction market specific strategies, whatever it is. We're going to be taking some of the flow from those, some of the liquidity from those, to provide yield back to the actual vault. So yeah, and again, like if you're a trader who wants to be able to use this, just keep an eye out. I mean, we don't even have an X account specific for this project yet. It's just my X account because the way we're launching is as a provider of functionality, versus our own product that you go to a front end and it's just us and it's branded out the gate.
Cool, cool. So I'm wondering, should we say the product's name? I know you told me,
Yeah, so
but
the product we're just calling it, the code name, let's say for now, is just Forecast. We are we might use that as the go, or when we actually go to market, more publicly as like our own product. But also, if the business of providing leverage and yield on USDC just takes off, which I think it does have quite a good chance of doing, we might never, be our own thing. We might just want to grow with these trading terminals, with these apps, and with these vault yield strategies. Many of which already have a lot of users slash TVL, and there's an excellent business there. So that's another possibility. So you may never actually hear about what this is called, or see a front end or see a logo or anything. But yeah, it's the way we refer to it internally, and to people who are chatting about with it, is Forecast. So we can call it that for now.
yeah, it's in my mind, it's like again, it's a liquidity hub almost, which is
Yes.
very good business, very solid business to be in. And it's much, in my opinion, it's much better than trying to build out everything yourself, like trying to build out the front end, because then you got to attract the consumers. There's just tons of people that are building and they need access to like leveraged liquidity. That's basically what that's the problem.
Totally. Totally. And it lets us keep the team small, hyper focused, just build the absolute best contracts, and the most secure and efficient contracts possible, and just remain extremely, extremely focused on optimizing that. So yeah, yeah, you seem to definitely get what we're about. I'm super excited to actually build out this integration, with a polyfactual product. It's like, exactly the type of partnership we're looking for at this stage.
Yeah, yeah, and like same here, same here, and we'll have more news about what we're building, Trade. We'll have more news about that as we move into October. So we have like a couple things planned for next week where we're going to release some more details about what we're doing. But long story short, it's very much aligned with this in terms of integration. My last question to you, Joey, is um, what I think we lost your camera again. But my last question to you is where do you see prediction markets going in the next 5 years? What's your kind of forecast for how big these things are going to get? We talked a little bit about it, but just to close it out, um, where do you see the direction going? Uh,
Yeah, great, great, great question. So I mean, I think that now it's pretty clear that this is a I mean, prediction markets have existed for many years. There's prediction markets in TradFi. There's, ways of betting on the weather, and, farmers using it as a hedge, or all that stuff. I think that, as you said in the beginning, coming on chain and looking at the sort of proof of concept of like sports betting, and just the sort of speculative culture that seems to be becoming more and more normalized, combined determining truth in a true incentivized, decentralized way, is going to become more and more valuable. And the value of aligning on truth in a transparent and decentralized way is just going to keep increasing. Those two threads coming together, I think that they're going to be tremendous. I think that it's going to be a huge part of markets, period. We might see that what we think of as prediction markets is going to sort of blend into just being markets, right? And like you mentioned, getting better asymmetric upside on Bitcoin speculation on Polymarket versus actually trading it or using a perps protocol, which is, yeah, I think of a sliver of the future. I think that, it could continue to take over more and more, and in forms that are not necessarily, they don't look like poly market right now, but it's still a prediction market under the hood. Like I mentioned, Euphoria. There's a lot of other sort of newer things integrating like gacha mechanics and things like this into hyper short term prediction markets that are definitely prediction markets, but they express some like different job to be done for the user. So I think that we're just in the very beginning stages of what could become a major, major part of just markets, period. Discovery of the value or the truth of things. We seem to have arrived at a primitive that, just makes sense, and maybe didn't make sense previously because the tech wasn't there, the liquidity wasn't there. But now it's very clear, and there's some investors who are far smarter than I am who seem to agree wholeheartedly given the news from today. So yeah, I think that's we're just going to see it become, the way, like I mentioned IoT, that was like a hot thing. There was funds that specifically invested in IoT hardware products when I was doing that. IoT is just kind of in every product now, right? Like every appliance, everything has some level of telemetry and some app or something you can do with it. I mean, I remember even when there was like funds that were specifically about like cloud and investing in like cloud startups and things. And that's just like, that sounds weird now because no one even talks about cloud anymore. It's just like infrastructure. But it's because it had proven to be so useful that now everything is kind of that. And it just sort of fades into being everything. I definitely see a similar thing for prediction markets where more and more of the job done by markets, period, right now is done by prediction markets. And you can sort of, you know, describe any market as a prediction market, more or less. What a market is. You're trying to buy at a price that you think is, there's some mispricing and you're predicting it'll go some other direction. But the way that it's specifically with the prediction market, there's a set length of time and there's this binary outcome, and you can buy tokens that represent the potential for a zero or a one. That's really what defines a prediction market. And I think that's a super interesting primitive that's just starting to be explored in terms of what you can do with it.
Yeah, yeah, I agree. I agree. I think we're at the very early stages right now, and it's exciting. It's just from what we've been building, and the community is great too. The ecosystem is great. It's so funny that all of these apps are starting to develop on top of Polymarket and Kelshi as well, and it's just such it's a really exciting time, I think, for finance.
Yeah.
Um, Joey, it was great having you on. Thanks for coming on and talking about this stuff. I'm super stoked for your product, so we'll definitely touch base in Telegram. But yeah, thanks for coming on, and it was awesome.
Awesome. Yeah, it was really good chatting with you. This hour went by very quickly, which is always a good sign. I love being able to talk about this stuff. Sometimes, these days I'm talking about it a lot with people who probably don't want to get into the details that I like getting into. So it's always good to have somebody who's as obsessed with this as I am to chat with. But yeah, this is super fun. And yeah, let's continue the business convo in Telegram. I definitely want to be, as soon as we're live, as soon as if you guys have your product out, I want to make sure that your users have access to leverage at, very very efficient execution. So yeah, let's make it happen.
Sweet man.
All right,
Talk to you
really
later,
good
Joey.
chatting with you. Bye.
Good chatting. Bye.